Hi, I'm Mike Collins, the founder and CEO of Alumni Ventures. Today we're going to talk about medicine and VCs and where we're seeing kind of the lead VC firms placing bets, making investments. A lot of talk right now about AI, seems to be in the news every day. It's earth-shattering. We're going to actually talk a little bit about it today here and its impact for the healthcare landscape, but there's a lot going on here, and it's a lot less in the news, but equally as exciting on its impact for humanity. So let's dig in. So disclosures, yes. So we're talking today about Alumni Ventures and my views and our views of the investing landscape. This is for informational educational purposes only and is not an offer to buy or sell securities, which are only made available through formal offering documents. All right, so 1 minute background on us. So been in the space a long time, started Alumni Ventures about a decade ago. Our niche is to co-invest alongside really strong lead investors, to bring together large groups of people, to get access to the most competitive deals in the venture landscape. And our target is to offer this to individuals and not big endowments and pension funds. So it's gone pretty well. Next slide. So we've raised, coming up actually on 1.5 billion from 11,000 customers. We're one of the most active venture capital firms on the planet. Again, related to being a co-investor. We're 100 employees, 10 investing teams in the venture hubs. Next slide. Really good trophy case. I think we're very well respected among VC firms and entrepreneurs as a co-investor of choice. Next. It all comes down to what deals can you get into. So one thing that's new this year, we are publishing kind of our Apex 50. These are companies that, you know, I think we're super excited to be investors in. Obviously aware that not all of them are gonna crush it, but we think just bringing spotlight to some of our companies just helps people understand us better versus 1,500, which can be a little overwhelming. Next. And yeah, these are the firms that we are most actively co-investing with. So you'll recognize these names. Next slide. So let's get into it. This idea of medicine 3.0, again, people who have encountered the US healthcare system understand it's reactive, you know, basically wait till you break down and then we'll try to fix you. And combine that with kind of a crappy insurance system, you know, it's clearly and expensive and bad. I think to use kind of a Scott Galloway term, the medicine 3.0, I think, is a real chance to chip at that. I'm not talking about in 2 years is going to be totally different, but I think disruption happens slow, fast. And I think that process has started, which will be more data-driven, tech-enabled, personalized, preventative, with a lot more choices, and where efficiency, cost effectiveness is going to begin to count. Now, highly regulated, there's a huge medical industrial complex, and it's not going to be easy, and it's going to take time, and you're not going to beat it by going head on. But this is where VC and entrepreneurs do their thing. And so we're going to talk a little bit about the shift and the opportunity over the next decade here. Cautiously, very optimistic. So here are just, this list could be 20 things, but here's just a handful of themes, which is early detection, cancer, one of the four horsemen of death. I think one of the vectors where we're going to start to see big breakthroughs and improving survival rates, early detection. I think we're going to increasingly put power in the hands of individuals with sensors, wearables, more data that you have control of. And then when you have the data, combine that with AI, that you're going to be a much more informed partner with your healthcare provider, consumer of information. Diagnostics is related to this, faster, more precise, the ability to crunch data and to do personalized stuff we're on the doorstep of that. Again, a theme, treat the one, not the many. And then the whole system, I think, is another pillar where we're going to see chipping away at reimagined patient care, where people are with more power and more control. They're going to shop. They're going to put together their own. This is where I'm going to get my GLP-1 drugs. This is where I'm going to take care of my mental health. This is my strategy for my own wellness. And, I'm going to increasingly narrow traditional medicine to, when you have a big thing that needs to get fixed. So, early detection, we all know. I think there's a lot of work. If you can get in early, like really early, there's a lot of stuff you can do with immunotherapy, things like, and these are just some of our portfolio companies. I encourage you to look them up, read the work they're doing, the progress they're making. This is all about, get in early, fix it before it's a big problem, and you can prevent and cure at a whole different rate. And so, again, most cancers, if you get them early, you fundamentally change the trajectory of outcomes. So I think getting in earlier with better data, better sensors, better detection, new approaches, will just change outcomes. And so if we can treat these problems, like we do now with colon cancer, if you get it early, it's kind of manageable, no big deal. If you get it late, it's a huge problem. So detection. Next. Okay, we've already seen this starting, our portfolio company, Aura, data. When you know what's going on in your body, and I think we're going to increasingly have more and more data that's individualized to ourselves. Again, Aura, super great on sleep. Apple Watch, really pretty good on kind of heart monitoring stuff. More and more things that you used to have to go to a big expensive scanner system, et cetera, I think are gonna find their way into homes. And so, with this data and AI, we're going to be able to do more preventative stuff. Again, and another thing very popular right now is kind of blood glucose monitoring, which is starting to kind of break the skin layer. And once you do that, again, there's a whole bunch of other things that you can be detecting. And again, just an example there where people can use that to find out how they react to coffee in the morning, right? Managing their blood sugar, where I have no reaction, my partner's blood sugar spikes. And so that's, again, also in this idea of personalized medicine. We are going to see an explosion of wearables and then people using AI with this data to develop plans, develop strategies, understand when they have a problem. So again, we have a whole portfolio of companies in this space. Again, I think we're going to see whole new things on diagnostics. So again, we have a tremendous portfolio in this space. The combination of data, the combination of AI, the combination of sensors allows us to do a lot more in the home, a lot more inexpensively. So again, you're seeing more and more kits going to homes where people can be testing, people can be diagnosing. These are disrupting in a simple word. Instead of a big centralized, I got to make an appointment with a doctor, I've got to do this. Oh, I know I have this issue. I have a kit. I get the data myself. I get the results. I can begin to interpret them. The backdrop here is it is very clear that with the right data, an AI system can exceed your doctor, who, by the way, is a generalist and maybe 20 years out of date in certain areas and is going to refer you to a specialist. Again, not proposing we're quite there yet. Obviously, get in trouble for saying, anything but consult your medical professional. But I'll just speak personally, which is every test I get now, I run through an AI system. And I believe I am very informed to have a good conversation with a healthcare professional in a way that, we weren't a couple of years ago. Okay. Again, personalized medicine, the ability to kind of understand your body, your genetics, your biome, your chemistry, your hormonal system, DNA sequencing prices. We could have put up a whole bunch of other things that were super expensive, whole body scans that are going and getting much, much cheaper, much, much faster. And so again, I think we're going to go from personalized data, personalized diagnosis, personalized solutions over the next 10 years in a really profound way. Again, this is human health. It's appropriately regulated. I think one can make an argument there are times when it's overly regulated and too slow because of the central bureaucracy that manages all this. But I think the weaponry and the trends are now inevitable, and we're going to see tremendous value created in companies over the next decade. Okay, personalized medicine for sure is happening. Patient care, again, like we're seeing more platforms, we're seeing more direct to consumer. I think this is kind of, a chart of like, where is it starting with, psychiatry, substance abuse disorder, some of these niche categories where there are way too few specialists and people are very frustrated about getting someone who can actually work with them. And so, this is like a lot of industries. It's, you go to the low hanging fruit, classic disruption theory. And again, we have a very active portfolio in the space. Again, we could list another 10 companies that are taking this on. And just, it's not going to be even. It's not going to be like day one, we're totally replacing the traditional system, but I think if you put this up in 3 years, there's going to be more dots covering more of these. So, and AI, I think, is just a huge accelerator to make all of these things work better, faster, more cost effectively. So just a couple of other things that I'll just share that I think are really active, interesting things. Again, this is kind of a catch-all idea, kind of most popularized by, Brian Johnson and his kind of, innovative, most tested man in the world business approach, which I think is actually very clever. But yeah, I think people are getting older. People are with that having different chronic diseases. I think everybody's read about the dementia issue. That's really about just people living longer. And so I think there's a lot of focus on the length of time one can be active and healthy. Kind of health span is, I think, a term. But I think there's a lot of money, a lot of work, a lot of interest in this space. And this is an affluent population. So if you can come up with a product or service to help a 50-year-old put another 10 years of, skiing on their life, the world will be at a path to your door. This is profound. Again, drug discovery of cancer, difficult diseases, some of the things with AlphaFold, understanding proteins, peptides, how they work, combine that with huge processing power, Stargate and the like, AI systems. There are a lot of really smart people with really deep understanding, super excited about the power of these tools. And I think we're going to, one should be very optimistic about our ability to address the four horsemen over the next decade. And that's heart disease, cancer, diabetes, brain health, those things that are really, we want to lick. And if you can lick those, it's a much, much better world. And so AI is going to be a big player in prevention, early detection, and then addressing problems as they occur. So really all along the front. And Smart BC is investing in it, and really exciting results starting to show up early in the approval process. Okay, so just one more thing. We obviously have a health tech fund. We have an AI fund. We have, for people who are new to the space, a foundation fund, which covers a lot of the investments in a lot of different sectors for people that want to dip their toe into our world of venture investing. These are the kind of personas that most of our customers have. They kind of fall into one or more of these categories. They range from trophy hunters who are really looking to hit home runs to people who are really interested in understanding what's next in their sector or for their professional development. And then you have just a super rational portfolio. I'm going to manage my portfolio. I can't predict the future, but I am going to be diversified and leaning into where the world is heading. So all are true. And we have great products for those folks. So I think we're going to take a few questions from our people participating today. So yeah, these are three funds that you might be interested in. Again, at our website, you'll see our entire portfolio, from well-diversified kind of, invest in everything to, the ability to create your own. So question one, over here in the chat. Yeah, how do you deal with the regulatory environment? FDA approval is tough and long and expensive. How do you know which startups can make it? Listen, I think when you do due diligence on a potential investment in this space, the regulatory environment is like front and center. So I would say probably half of our companies have what I call, regulation light landscapes that they deal with. And the other ones, you're looking for teams, including lead investors, who understand the process and know how to navigate it and do it. You know, and it's a double-edged sword, because if you do get through it, you know, that is a moat. So it's a balancing act. And again, you know, when you look at a deal, you're not looking at one thing, you're looking at the team, the size of the problem, the science, the traction the team has made. Where have they done this before? Are the right people assembled? How much money is this going to take? What are the risks? Is this a team risk, technical risk, science risk? Who's the lead? Very important decision for us. Do they know the space cold? All those things come into consideration. With telehealth soaring, what prevents more incumbents from dominating the space, and what unique advantages to venture-backed startups bring? Listen, you know, the whole disruptor versus incumbent discussion is really interesting. It's subtle, it's nuanced, but in general, the world is littered with people that assume the incumbents are going to win. And just the innovator's dilemma says there are time, profit, resource incentives that keep them wanting to defend where they're at versus invent something new. And I'll just bring kind of a live example of that from today, which is, you know, Google had all of the things in-house a decade, 5 years before OpenAI. It really took OpenAI to come out with ChatGPT to kind of get Google off of its butt and start working in the space. Now, is there going to be a place for OpenAI in Google? We'll see. And then we have DeepSeek and other now Chinese companies coming out and doing it in an innovative, cheaper way, right? So, you know, that's the story of innovation and disruption. Don't bet against a small group of highly dedicated people, especially today with AI. You can do so much more, so much faster with less. That if you were to plot a curve of how much a small team can accomplish with $2 million over time, that's been on a geometric decline over the past 15 years. So, you know, I think we're going to see our first 10-person, you know, billion-dollar valued company, you know, over the next 3 years. So, what you can accomplish, the forced creativity, the innovation, the speed at which a small group can go compared to a big company, compared to, you know, bureaucracy, systems, incentives. It's the innovator's dilemma. So, you know, we really like always the chance of the young upstart beating the incumbent. Health tech has this other dimension. The third dimension is really the regulatory environment. I think that's going to actually change over the next 5 years as well, to emphasize speed a little bit more and a little more flexibility. So I think that's a tailwind. Last question: how many companies would I own if I invested in the health tech fund? So all of these funds listed here, and it's the kind of the standard, are 20 to 30. So you'll get nice diversification within the vertical of, you know, lead manager, sector, team, geography, stage. We also have the ability to participate in kind of single investments. So a lot of people will think about this, hey, I've got my core funds, and then I complement those with particular investments because I think they're really interesting and I love the idea and I like putting a little money to work behind this team and the chance of hitting a home run. So, but to answer your question quickly, 20 to 30. So it's a nice diversified portfolio. Again, a lot of our customers, and we encourage this, will build a portfolio actually of, you know, 100 to 200 companies over a few years, which given the power law nature of venture capital, is really a good way to go. So I'll wrap up. We really encourage people to hop on the phone with us, explain, where you are in your journey, what you want, how we could potentially help. There's probably a pretty good answer. So take the 15 minutes, talk to us, and we'll see you down the road. Thanks.